Good day, everyone, and welcome to a new technical market update presented by NAGA. We're going to talk about the latest development in the FX market ahead of the ECB rate decision scheduled for Tuesday and also the US CPI. Let's have a look at the charts now. As you know, the US dollar has been under pressure recently, and I believe that traders should have a look at long-term charts like the monthly charts to know where we stand and to be able to have a clear view about the future price action. Beginning with euro dollar, as you can see here, we have a monthly chart of the euro. Last week, I highlighted the importance of this trend line drawn from 2008 high. And as you can see, market already broke a few months before the trend line. Also here, I can draw another trend line from 2014 peak. And as you can see, the market managed to break above both trend lines. We had a little bit of retracement here before another jump. So usually this formation is called a throwback, where we have a breakout, retracement, and then another continuation to the upside. So as you can see, the next resistance stands at 124. So this is the expected target for the coming weeks or months. Now, let's have a look at the short term, the 1 hour chart. We have the ECB rate decision coming. So we expect volatility to increase. Since the beginning of the week, the euro was moving sideways, as you can see, inside this consolidation triangle. Now here I draw the levels of support. As you can see, a lot of supports lies in a small distance. So we are expecting euro to continue higher. For that, it should break outside of this triangle first. And if we have a clear break, then euro can target this high here around 120, 174. A daily close above it will push prices higher. All right. So short-term target is around 122, 122.20. In case the euro breaks below this trend, this consolidation triangle, then we can see that we have here another trend line around 120.80. So again, another low here, 120.77. So in case the market breaks lower, then we have 120.48. So as you can see, from 120 to 120.80, we have a lot of supports. So it will be very difficult for the euro to trade lower. So as of now, nothing has changed. The same view. The euro should continue higher. This sideways move can be considered as a correction only, and we should expect higher prices. ECB is likely to trigger another rally for the euro, but worst case scenario, if we drop, it should be considered as a short-term correction only, and we should find support again around 120.50 and 120.10. So this zone here. But the most aggressive scenario is a continuation. The most defensive one is a correction towards this support zone and then another rally. Let's have a look now at the sterling dollar. This is the monthly chart of sterling, and as you can see here, around 120 gave a very strong support to the pound. Okay, it was tested like 3 times in a row. Here we can see a breach lower, but it was not confirmed because market did not close below the support. Then we bounced. Last week, strong close, and last month, strong close, and we have a continuation now. So we can expect the pound, if we break above 135, because as you can see here, the high was around 135.40. The pound actually is facing resistance from here. That's why. As you can see here, I have a low of 2008. Also, I have another resistance here, 36.61. So these were a former supports that are likely to become resistance. And especially with the ongoing talks about Brexit deal. So the pound will be more volatile than the euro, but I still believe that the same price path will be for the pound as well. So we expect more upside, especially with the break of 135, 135 and a half. The next station should be 136.60. Let's have a look at the 4 hour. As you can see, a lot of volatility here. It's very noisy price action. But as you can see, if I zoom out a little bit, the market is moving in a series of higher lows and higher highs. Here we have the strong resistance around 34.80, 135, psychological level. But if the dollar weakness continue, if the market trade with one alignment, I believe we should extend higher towards 136.5. Opposite scenario, what I don't want to see here is a break below this level here, 131. I believe then the technical picture will change. But as of now, nothing has changed. Dollar weakness across the board. Now let's have a look at the dollar yen, which is the last currency pair we'll talk about. I don't like dollar yen, to be honest, for the time being. As you can see here, this is the monthly chart. Very low volume. The size of the candle is very small, which means that there is a lack of volume, which can lead to unclear price action. So the trend for this year is moving to the downside, but again, it's not the clear price action I want to see. In the daily chart, we have a clear range. So the fight is taking place between 104.75 and 103.67, right? So a break to the upside will not mean a reversal, but a wider correction towards this trend line here, 105.24, will give strong resistance. Also, I have resistance here, 105.13. So 105.13 and 105.25 will give a strong resistance for another continuation. But we have another scenario, which is continuation to the downside as well. But for the time being, it's moving sideways. It's in a range. So the best thing to do is to wait for more price action to have confirmation about the future direction. All right, so that's it for today. I wish you all good luck in your trading, and please make sure to register to our upcoming US CPI live session, which will be Thursday at 3:15 GMT +2. And also make sure to register to the live sessions we have as well. And also make sure to like and subscribe to NAGA YouTube channel. Thank you very much, and I wish you all the best in your trading.